Hi, I'm Alison from FX Scouts. In today's video, we're going to be discussing whether it's possible to get rich through Forex trading. Now, we've often heard stories about Forex traders who get rich in a very short space of time, and they go on to buy fancy houses and fancy sports cars. I mean, we've seen those ads on YouTube. But these ads often end in a link to open an account with a Forex broker or to buy a trading system. Now, while common sense dictates that we should brush these stories off as marketing gimmicks, some Forex traders have got rich through trading. So before we can decide whether you can get rich by Forex trading, we need to define what rich is. A person that earns $50,000 annually would be considered rich in some third world countries, but in the USA and Europe, this would be considered a middle class income. 10 years ago, a bank surplus of $1 million would have been considered wealth, but this amount is now much higher considering inflation. And a 2017 survey done by Charles Schwab showed that individuals thought that having a bank surplus of between $2.4 and $3 million was now considered wealth. So although this amount varies depending on which country you live in, for the purposes of this video, we'll use $2.4 million as a benchmark for whether you can get rich by Forex trading. Now, the short answer is that it is possible to become rich by Forex trading, but it can take many years for a Forex trader to turn a small account into a big one. And, of course, there is the risk of losing it all. And this brings us to the question of the optimal starting capital in a Forex account. So there are many Forex brokers that allow traders to open an account with just $1, but it is very difficult to grow a trading account with such a small starting capital. This is because in order to open a trading position, you'll have to trade with very high leverage. Most brokers have a minimum starting position of 0.01 lots. And this would mean using leverage of 1,000 to 1 on a $1 account. And as a result, for each pip gain or loss, you would earn or gain 10 cents. And this also means that for a 10 pip loss, you would blow your entire account. Or you would face a margin call with a loss of just 50% of your margin, or 5 pips. As a general rule of thumb, traders should not open a position with more than 2% of their capital, and they should not risk more than 5% of their capital per day. And if you open an account with only $1, this means only trading with 2% or 2 cents of that $1 per trade and only 5 cents per trading day, which is absolutely minute, which means it will be very difficult to make gains on that small amount. So going by this rule, someone who trades 0.01 lots and uses a leverage of 1 to 100 and places a stop loss order at 50 pips away from the entry would need roughly $350 in starting capital. Anything lower than this would just trigger premature stops. And generally, the risk of loss decreases as the amount of capital increases, provided the trader uses prudent risk management techniques and position sizing techniques. And as long as the lot size was considered conservatively, it would be much easier to grow a big investment into a big trading account than a smaller investment. So obviously a trader with $2 million is only a few steps away from becoming rich, but someone with $10,000 in their account will have to work hard for many years to join the ranks of the wealthy. And even a trader with $100,000 would have to work fairly hard to turn that money into $2.4 million. But another way to look at it is to look at your return on investment. If you make 5% on your initial deposit in a month, this return would be very different if you started with $5,000 than if you started with $500,000. A 5% return on $5,000 is $250, and if you multiply that by 12 to get your total profit for the year, you would have $3,000. And this is a return of 60% on your initial investment, so it's an excellent rate of return. But it will still take you many years to become rich. If you had $100,000, a 5% return would be $5,000, and over a year, $5,000 a month would add up to $60,000. And if you don't need to withdraw your profit straight away, this is when things become a little bit more interesting. So if you started with an account balance of $100,000, for instance, and you had an account balance of $160,000 by the end of the year, like the example I mentioned earlier, you would have a much higher starting capital for the next year. This means your profit at the end of the following year will be 2%, 5%, or 10% of $160,000 rather than of $100,000. And again, this would compound year after year. So as you can see, the initial capital put forward by a trader has a considerable effect on whether you become rich through Forex trading. But it's not the only criteria. And as we always say, in order to succeed in Forex trading, you'll have to have a good knowledge of fundamental and technical analysis, and you will have to keep up to date with the latest news, political events, and industry developments in order to become profitable at Forex trading. And what we've noticed is that the percentage of traders that can keep a Forex trading account going for more than a year without blowing it up are very small. In fact, during a recent podcast interview with one of the top analysts at Pepperstone, Chris Weston, he said that if traders could make it to 1 year and break even on their accounts, it would be an excellent achievement. And of course, having a solid trading strategy, being very cautious with your risk management, and not allowing your emotions to come into play when you're trading is important for growing your Forex trading account. Thanks so much for watching. If you have any questions, please send them through to us or write in the comment section below. And remember to subscribe and like.